and welcome you tune into your trades in this show. We will take you for the next half an hour how the markets have shaped up. Let's take a look at how market closed. Snehi, it was a weak day in the markets. In fact, we saw cuts of 0.7% coming in on the Nifty. We couldn't even manage to hold on to those 24,600 levels. 24,542 is where we closed the day at. Sensex also closed 0.7% lower. Nifty Bank also saw sharp cuts of 0.5% coming in. In fact, for all the counters, for all the frontline indices, we did see them ending the day at the lowest point of the day. We had, if you can pull up the charts for the broader markets, they were the ones that were really holding on today. If you pull up the charts for mid caps, it ended the day in the red with cuts of 0.4%, but small caps were trading with gains of 1% in the green, managed to hold out in the green, but that also turned absolutely flat by the end of the day. Gave up all those morning gains, traded up 0.1%. This is how largely the market shaped up. We did see a tepid day coming in, but a couple of names that made news. We had Yes Bank that tumbled ahead of the fundraise meet that happened. Ola was another one. Ola, Aptus Values also skipped today on the back of big block deals coming in. And Adani Group of stocks also were in focus today on the back of the fact that Adani Group has denied links to the Iranian LPG in that case. So on the back of that, Adani Group of stocks were also in focus today. Bata India, another counter that was in focus on the back of a brokerage note, Nuvama, that gave a bearish stance on Bata. On the back of that, Bata was also in focus today. And we also had United Spirits that was in focus on the back of a brokerage note, but a bullish brokerage note coming in from JP Morgan. So largely, this is how the construct of the market was. Here's hoping that perhaps after a few sessions of range bound and consolidative trade, we see an up move coming in tomorrow.
Ankita, if I remember correctly, this is exactly what we said yesterday as well. We've seen no improvement from there on. In fact, we've seen further cuts. Hi there, let's take a look at what the market has panned out to be like. Ankita has summed up most of it, but I want to take some time to talk about the sectoral moves that we've seen in today's trading session, because you have realty that has continued its one-way dominance when it comes to Nifty, when it comes to sectoral gainers. Nifty Realty up 1.2%, led by the gains of Sobha, Brigade, Prestige, Phoenix, Oberoi Realty, Lodha. Lots of stocks that were in the green today from the real estate pack, and this is perhaps the only pocket of where we've seen so many stocks of this basket be in the green. You have Sobha that's ticked up with another 5.5% in today's trading session, which is very surprising given the kind of market we've seen in, but no surprise if you take into factor Lodha's quarter-4 numbers. That momentum, that positive momentum from the street, that cheer from brokerages continue to come in for Sobha, and on the back of that, Sobha is also up 5.5% as we speak. Another space that was in the green today was all the media stocks. So a couple of them have done pretty okay in today's trade. But however, these were the only two indices that were in the green today, because big losses were seen across the energy, IT, PSU banks, FMCG, auto, pharma, metal space. So it's all your defensives too that have taken a big hit in today's market. Other than that, what is still surprising and still looks optimistic for the market is the India VIX cut that we've seen today. A 3.5% drop coming in India VIX. So that seems to be cooling off. There seems to be a lack of volatility given that the market is headed in one direction, even though that's towards the red. But largely that is what the market has summed up to be like. It's the likes of Adani Ports and Enterprises that have dragged the Nifty losers because of what Ankita mentioned earlier. Bajaj Finserv, Coal India, Power Grid, Bajaj Finance, SBI Life and Apollo Hospitals all trading with cuts of more than 1.5% in today's trade. That's what the market construct has looked like today. But where are we headed from here on? What lies ahead for us? Let's welcome on board Vikas Jain to help us understand these questions better and give us a better outlook on where the market is headed. And Vikas, hi, thanks so much for joining us on the show.
Yeah,
give us a sense of where you're seeing the market headed, because it's been a second day of a big consolidating move coming in for us. We have been tepid for the last few trading sessions, but cuts have intensified. So what are you penciling in for the markets? Because today even Nifty small cap has had trouble holding on to its trade of green. So the broader market strength is also looking like it is fading now. Do you see any support coming in the market right now? Or do you believe that this is just the beginning of a few more sessions of consolidation? Is that what we're in for?
Look at the breakout was been missing on the higher side near to those 25,000 mark. And we witnessed some good amount of profit booking, almost 500 points over the last few days. So markets are witnessing some amount of knee-jerk reaction near to that round number, which has been witnessing through. Now the support area of 24,700, which was been holding on through with the 20-day average, has now turned as a resistance. And throughout the day, if you look at the markets were failing to cross the 24,730, 24,750 band. So that would act as a strong resistance area. No doubt we are trading at the support. So 24,400, 24,450 is a strong support area. But the broader momentum positive would be only about 24,750, which would be a crossover and a sustenance above that, which would give a strong directional up move.
Right. Hi, Vikas. This is Ankita also joining in. So, Vikas, tell us, amid this volatile market, what are your picks? What are your pockets of value? What are your calls going to be in this market?
So as the markets have been pretty volatile, we'll trade with one long and one short. So Bajaj Finance almost made us scale a new 52-week high in the last week of April near to 9,600. Since then, the stock is making lower tops on daily and weekly charts both. Today, the stock has broken its 50-day average with strong volumes. So we expect the stock would see some amount of strong corrective action. And the stock to relative basis also compared to Nifty is showing some amount of weakness. So we expect the stock to decline near to 8,500 levels. So would recommend a sell on Bajaj Finance. And the second stock, low beta stock, GAIL, where the stock is trying to cruising to above its 200-day average. So it's been trading in a particular barrow narrow range. And historically, if you look at when the broader markets witness some amount of corrective action, GAIL India outperforms. So we would like to go with a contrarian buy with GAIL with a small stop loss of 184 and a target of 250.
Sell call on Bajaj Finance, but looking positive on GAIL. That's the Vikas's picks coming in. Vikas, thanks so much for joining us with your market view and your stock-specific recommendations. On that note, we'll let you go. But while we are talking about word coming in from the wise, let's talk about the word coming in today from Matt Autton. He was here in the studios today where we interacted with him, and he believes that FIIs have been on the edge with regards to India since it is a complex market, says Raymond James Investments Matt Autton. Yet he believes India is a standout market which offers multiple opportunities across the sectors. Let's go across and listen in.
There's a couple of things that are at play. India is a more challenging market to invest in as an overseas investor, so you have to be very committed to open up trading licenses. There's definitely passive ways you can play it by some of the ETFs, but there aren't as many active options. So I think as an investor, that's what makes it more exciting because you don't have a ton of foreign flows going into these companies. There's more room for these ideas to play out. But in conversations with clients, especially as clients are finally starting to look overseas as opposed to the US being the only option as you see good returns coming from the rest of the world, I think there's a very real openness to finding new markets and other long-term growth opportunities. And so India is certainly one that I think is very exciting and is a standout relative to, say, Europe, where there's some very, very interesting opportunities there, but there isn't the same growth story.
Coaster of a year since Prime Minister Narendra Modi took charge for the third time, and even though the narrative has been that FIIs favor the current administration, they remained largely on the edge, with our benchmarks notching just single-digit gains since less than the enthusiastic verdict coming in last year. My colleague Sharath is joining in with this market trend.
It's been 1 year since the results of the Lok Sabha election has come in. It is the third time for PM Narendra Modi coming out. But let's see how the overall markets have actually fared. And sensex is up 6%, Nifty almost 6%. Mid cap, small cap, they have done well, largely mid cap. Interestingly, Dow Jones, that has done well, almost 10% up if you compare it overall. Also, there are other indices, also global indices, which you'd like to point out. DAX, NASDAQ, that is where the momentum has been very strong. And markets, if you look at it segment wise, IT segment has performed really well. On the losing end, auto segment, metal, PSE, they're falling between 3 to 12%. And of course, banking and FMCG names still holding up. Mid cap, small cap indices also doing pretty well. Of course, the Nifty gainers, if you look at it, HDFC Life, Zomato, Bharti Airtel, and do remember Zomato has recently entered in the Nifty index, but still, nevertheless, a strong momentum happening in the stock. Top losers, IndusInd Bank, Adani Enterprise and Tata Motors is something which you would be looking out for in Modi 3.0. Also making it to the list is Bajaj Finance and Shriram Finance. That's the top 5 gainers coming in. And Coal India and Asian Paints also making it to this list. So this is the overall performance segment-wise, Nifty stocks and global stocks when it comes to Modi 3.0.
Interesting data coming in, Sharat. Thanks for collating all of that. But on that note, we'll slip into a very short break and be right back with more news and updates on the other side. Hi there, welcome back to Your Trades. Let's shift focus and talk about what's been happening in the F&O space, how have the derivatives shaped up today. Before we do that, let's just once again revisit what the India VIX has done today. 16.6 thereabouts is where we've ended in the India VIX. It's been a 3.5% cool down on the India VIX today, but when you take a look at the active calls for the 5th June expiry, that's this Thursday, 24,600 and 25,000. That's quite the range over there, is where we've seen call writing with maximum open interest in calls at 25,500. So still indicating that we may be in for some optimism in the markets, because 25,500 is where we're seeing some open interest in the call writing. But on the flip side, if you take a look at the active puts for the 5th June expiry, 24,600 and 24,550, so rather narrow range when it comes to put writing, which could indicate that we might just have bottomed out and there may be some optimism going ahead, because the maximum open interest in puts is at 24,000. So well, that's a broad range coming in of 1,000 points, but all eyes are going to be on the market and where we are headed in tomorrow's trade, given the kind of consolidation we've already seen in the week so far.
Alright, so that's how the derivative diary looks like, but let's move on and go across to see what Morgan Stanley has to say about India. Even as global markets grapple with uncertainty, Morgan Stanley is doubling down on India. Top strategists Rhythm Desai and Chetan Ahya call India an oasis in the desert, backed by solid macro fundamentals, rising capex and a resilient service sector. Here's why the investment giant remains bullish on India's growth story. Let's take a look.
If you do a little bit more intrinsic valuation, stocks are cheap. And this is not something that people outside India have completely understood, which is why they are underweight. I think India is in this, is what I term as the oasis in a desert. I suspect as we go into the second half and beyond that, and there is some stability in US policy, corporate issuances will pick up. And that will give an opportunity for foreign investors to continue to engage in Indian stock markets.
India is relatively insulated to the extent to which its exposure to global goods trade cycle is much lower than everybody else. And at the same time, it has this structural domestic demand story, which is also much stronger than the rest of the region. And if you see the trajectory of Indian government, both center plus states taken together, revenue expenditure versus capital expenditure, both the lines are moving in the right direction. Over the last 5 years, we've seen a consistent decline in revenue expenditure to GDP, and that has been taken as an opportunity by the government to increase its capital expenditure to GDP.
Okay, that's the word coming in from the top voices at Morgan Stanley, but let's move away from that and let's get stock specific once again. And Rabinder is joining by with a list of all the stocks that were in the spotlight today. Rabinder.
Well, as Jindal Stainless is in focus, the company has acquired a equity stake in special purpose vehicle formed in collaboration with Oyster Renewable Energy Private Limited to develop a 282 megawatt hybrid renewable energy project, and company has acquired 33.64% equity stake as on date. Apart from this, Vodafone Idea is also in focus, where Kotak Security has maintained the sell rating and cut target price to ₹6, and Citi has maintained the buy rating with and they have also cut target price to ₹10. Novama has maintained the hold rating and they have cut target price ₹7.5. Apart from this, Bata India is also in focus, where Novama has maintained their reduced rating and they have cut target price ₹1,011. They have trimmed FY26 and 27 revenue by -2.5 to -5.3%, and the resultant PAT by -3.7% to -14.3%. And Goldman Sachs has also maintained the sell rating and cut target price to ₹1100. And lastly, Ola Electric is also in focus, where Ola Electric has 3.2 of equity change hand in 3 bunches. So back of this, Ola Electric is also in focus.
Alright, so these are the stocks that were in focus today, but let's move on to another counter that was in focus today, and that's United Spirits, because JP Morgan has upgraded United Spirits from neutral to an overweight stance. They have also raised the target price for the counter. My colleague Ashesha is joining in with the details of the note.
Well, yes, United Spirits is in focus on the back of this brokerage report that has come in. As you mentioned, JP Morgan has gone ahead and upgraded the stock to an overweight rating versus their earlier neutral rating. In fact, they've gone ahead and increased their target price to 1760 versus their earlier target price of 1450. So that's a big uptick as far as target price increase is concerned. They say they are increasingly growing confident on higher earnings growth delivery that the company is likely to report over the next few years. In fact, they've raised their FY26 and 27 EBITDA estimates by 3 and 7% respectively. This will be supported by margin improvement and better growth outlook in the prestige and above segment. Remember, this category reported better than expected volume growth in the quarter gone by as well. So the outlook for prestige and above, or P&A segment as we call it, continues to remain very positive. They've also spoken about state-specific factors that are working in companies' favor. For example, Andhra Pradesh market is now opening up. They've doubled their retail outlet reach in the state of Uttar Pradesh. Better excise policy will drive premium sales resilience in the state of Madhya Pradesh, and privatization on retail will also help the company in the state of Jharkhand. So several state-specific factors that are likely to aid the company going forward. Now, the stock performance has been rather muted. They say Nifty is up 4% on a year-to-date basis, but United Spirits, meanwhile, has declined nearly 7% over the corresponding period. And they say upward EPS revision and higher visibility of growth could support stock price performance going forward. So on the back of this JP Morgan report that has come in, where they have upgraded the stock to an overweight rating now from neutral earlier, United Spirits is gaining in trade today.
United Spirits, good show in today's trade, but on to an ET now exclusive. An overhang may clear for AU Small Finance Bank, and there could be clarity soon as the RBI is expected to respond to its application for the universal banking license. Ankur Mishra is joining us with all of these exclusive details. AU Small Finance Bank doing very well, did very well in today's trade, a 1.3% uptick. Ankur.
Yes, sources say that Reserve Bank of India is likely to reply to the application of universal banking license by AU very soon. We understand this application was already given last year, and now regulator may respond to it for becoming universal license as per the criteria which was set by Reserve Bank of India. Minimum net worth of 1000 crore is required. Also, there is a requirement in terms of gross and net NPAs. Now, if you look at AU Small Finance Bank, the gross NPAs are well below 3%, and also the net NPAs fall as per the criteria of Reserve Bank of India. If you take into consideration how the bank is been responding in terms of numbers, but all in all, it will depend on the Reserve Bank of India's assent of becoming a universal bank. But for now, we understand that this is likely to happen very soon.
Well, moving on from AU Small Finance Bank to BEML, with major focus on promoting EVs, BEML has planned to launch various environment-friendly projects, says CMD. He also adds about the order book for this year. Let's go across and listen in.
We decided to, do away with the fossil fuel in a phased manner, the fossil fuel vehicles that we use for transportation. And towards that initiative, we launched the EV initiative yesterday for the rail and metro sector. And in 25-26 itself, we expect that the rail and metro and defense put together will contribute at least 60% to the top line of the company. The backlog of orders, that we could not do in 24-25, those we will complete by December this year. Plus, in 25-26, we expect an order inflow of at least around 14,000 crore.
Okay, let's move on from that. That's the management of BEML that we spoke to earlier in the day. But Rajesh Kumar Singh, Defence Secretary, sees sustained growth in the defence space on the back of domestic manufacturing and imported tech as well. He also emphasized the need to focus on ease of doing business and ensure that private sector participation increases when it comes to the overall defence space. Let's go across and listen into what he had to say.
In my view, that the defence sector will see sustained growth on the back of domestic industrialization, complemented by a small quantum of cutting edge technology that we may have to import from outside. So the next year's budget is, I think the modernization budget alone, which is the capex, is about 1,80,000 crores. India will be spending between 20 to 25 billion dollars per annum for the next decade, if not more, on its modernization budget. At the institutional level, I would say that we need to work on ease of doing business. We need to ensure that the defense industry really suffers from the license permit Raj, and to some extent it cannot be avoided. You cannot produce lethal weaponry without having even a license. You can't delicense these sectors, but you can make it happen faster. We have to ensure that our procurement processes give them an equal access when it comes to orders. That, as I said, I've already committed that we will be ensuring that nomination-based allocations of orders to the public sector will be a thing of the past. We'll increasingly go for competitive bidding across all platforms.
All right, with that, it's a wrap on this edition of Your Trade. Snehi and I will take your leave. Thank you so much for tuning in.